The blockbuster jobs data that drove the dollar up late last week may be limited. This is one interpretation of a Goldman Sachs report that has seen analysts at the US investment bank keep its 3, 6 and 12-month forecast for the price of gold at $1,600 per ounce. It says that investment demand will be supported by fears of recession and political uncertainty. Let's take a look at the chart showing that gold has gained about 14% so far this year, on track for its biggest annual rise since 2010, but it's down around about 6% from a 6-year peak of $1,557 an ounce seen early in September. You can see it on this chart here with that first of these two dotted blue lines. In its note, Goldman attributed this fall that we've seen since then to rising global risk appetite on an easing in US-China trade tensions and a strong US labour market. But further out, Goldman analysts are more concerned for the risk on trade and suggest that gold could be the beneficiary. So where do we go from here? There's a target up here. If you are long at this level here at the moment at 1464, your stop would go below this area here, possibly below the red wavy line here, which is the 200-day moving average. We've not really seriously challenged that since May this year. So that's a good area possibly for any stop if you're long here. So your stop would be around about 1420. If you wanted a stop that was further out, you'd have then to go back to this area of support down here at 1400. So your stop would go at around about the 1390 level. So that's if you're long on this. If you are still short and having seen it drop from the highs that we've seen this year, you'd be putting a stop above this line of resistance at 1514, so around about 1520. But I think the Goldman projection for next year is not expected to come immediately in 2020, but sometime next year. This is the target that it's looking for, $1,600 an ounce, the Goldman 2020 price target.